So this is flats at Fishers, a few hundred units, Fishers, Indiana. This is a perfect example of the assets we look to buy. This was built in 2015, so it's got all the Class A amenities, a great leasing center, pool, clubhouse, gym, all the things that high dollar residents expect. But it was an out-of-state owner. They had a third-party manager, and they had let some serious maintenance go. So there were some maintenance issues. They weren't pushing rents. They weren't really aggressive on their expenses. And so that's the perfect deal for us, in that we can come in and start getting aggressive on rents. Right now we're going across the building here where we fix the balconies. They had let these balconies go and weren't maintaining them. So we're coming in and fixing all that. Our management team, our management process of reducing costs by using a lot of in-house maintenance versus some of those third-party managers that call contractors every time the AC breaks or light plumbing help is needed. And then pushing the rents, really understanding the marketplace, what these things rent for. And it's in a market that I'm really excited to be in, which is Fishers, Indiana. It's a Class A suburb, great schools, lots of jobs, lots of diversified employment. It's not just a one factory town, growing like weeds. And we are right in the heart here of Fishers, Indiana. We're near some of the major retail. One of the biggest employment corridors is just down the street. They're improving the roadways into limited access highway. That's because of the growth of the area, and you've just got every kind of retailer you could imagine up and down this corridor. And so this is what I would call straight down the fairway for the types of assets that we buy, that we'll continue to buy in our current fund. And that is a undermanaged asset that's relatively new. So 2015 is about as old as we'll go. But our value add approach is not really swinging hammers anymore. As some of you might already know, it is finding undervalued, mismanaged assets where we can come in with our BAM way of doing things and raise rents, reduce expenses, and then we look for a marketplace where we know the overall market is also growing, and that's an important factor. So we look for these suburban markets in great cities across the Midwest where people are moving because they're safe, there's plentiful jobs, they've got great schools, they've got all the amenities, the retail, that you'd want, and they're just seeing a lot of in-migration. And those aspects, while they're not always easy to find, you've got to kiss a lot of toads, look at a lot of deals to find something where all that lines up. When it does, it allows us a very high conviction of returning our investors' expectations 2 to 2.5 times their invested capital, IRRs 15, 20, maybe even more in some cases.